There are many places to buy Bitcoin. They collect your personal information and jeopardize your privacy. KYC is the illicit activity. BISC is open source. It does not collect user data. You keep your private keys, create or take offers to trade peer-to-peer, and keep your Bitcoin private and secure.
All right, you guys are live.
All righty. Well, exciting to be here. Thank you, Bitcoin Magazine, for the opportunity. We're here to discuss, quote, "Get Rich or Die Trying" is the title of this panel. We have a fantastic lineup of guests. I'll go ahead and introduce. We have Juthica Chou, who is formerly the founder of LedgerX, currently unaffiliated. We have Joel Edgerton, the Chief Operating Officer of bitFlyer. We have Guy Hirsch, who is the USA Managing Director for eToro. We're currently waiting on James Putra to join. I'm told he will in a moment. We have 7 blocks until the halving is expected. So this might end up being an abbreviated session, but it should be great nonetheless. Looking forward to diving in. So let's talk about the topic at hand, the halving. The halving has been talked to death. Here's maybe a different angle. So Bitcoin's security spend is actually going to decline by about half, assuming everything works the way we expect it to. In terms of Bitcoin's sort of fundamental nature, is this something that concerns you? Is this sort of actually potentially a shock to the protocol? Juthica, I'll let you take the first stab at it.
Yeah, I mean, I think in general, the decline in block subsidy is at least in the abstract going to make it less secure. Now, my personal view is that the orders of magnitude that we're looking at right now are not substantive. But if one of the things that I always would have been excited about seeing, and I think over time will evolve, are betting markets that are not just betting on price per se, but are betting on things like hash rate and transaction fees, so that we could see what a market is pricing in for second order effects like that.
And James has just joined the show. Welcome, James. James is the head of product strategy at TradeStation. So let's move on. So would you say that traders on your platforms, 3 of you, manage brokerages or exchanges, do they need specific catalysts to be induced to trade, or is the asset class kind of sufficiently enticing in its own right? We'll start with you, Guy.
Sorry, I think it was mentioned it was aimed at James. So I missed the last part of your question. Can you repeat that?
Would you say that we need these Bitcoin holidays to keep liveliness alive for traders, or is the asset class just sufficiently enticing in its own right?
No, I think we absolutely do need these holidays. Bitcoin is based on trust. This is a community. It's analogous to almost a religious movement or a philosophical movement in terms of how the world should be organized, and there are some elements here of mystique, meaning we don't know still who created this. There are elements here that are analogous to things that humans do as part of believing in something. And so, this is an open source code. Anybody could just replicate that and do whatever they want with the code, but people believe in the actual kind of genesis and original protocol. And so celebrations like these are absolutely important to create a growing community, growing trust, some sort of, I would say just more belief into the fact that this is going to happen. that this is an indication of new world order at some point in the future. And so it's absolutely critical that we continue to celebrate these things. We continue to come together as a community, but also show others that, why we're so excited and why we believe in these things. And at the end of the day, these are the dynamics of these philosophical movements or kind of religious movements. They need to have these things. They need to have these pillars in order to grow and have more trust among the quote unquote members in what we're doing here. So absolutely.
And the rest of you, feel free to jump in here at any moment.
Well, I think for sure there's no downside to having a catalyst like this. And in particular, as you're intimately familiar, Nick, a catalyst that brings, people with differing opinions. And I love betting markets when there are people who have different opinions about whether this is priced in or not. The traditional markets, equities get earnings every quarter. Macro markets get Fed announcements. We get this once every 4 years. And so I think it's a huge boon for activity and for attention.
I think that's the key, is the attention. It gets people talking about the asset class, and it just brings this wave of enthusiasm around what is it, how do we get involved, and it starts to bring new people into the space.
Yeah, I think I have a little bit more of a contrary perspective. I mean, from a marketing perspective, yes, it's nice to get people involved. But from a trading perspective, the traders are going to trade regardless of whether this event happens or not. I mean, they may look at what the fundamental impact, if the miners are hoarding their coin and what they're going to do with it. And that may impact on their strategies, but their strategies are going to be implemented whether there's a halvening or not. But from a marketing perspective, from an excitement perspective, I think, yes, it does have quite a nice impact.
So this is a question for the room. So anyone feel free to dive in here. So the March kind of explosion we saw in crypto markets was characterized by a decline of leverage in the system generally. And a lot of the signs we've seen since then have evidence that it was mostly a spot-driven rally. What do you make of this? Is this kind of a fundamentally healthy way for the industry to operate, or is leverage not something really to be worried about too much?
I mean, from my perspective, I come from more of a traditional finance, and 100x leverage, 125x leverage, for me, is not very healthy. I mean, it may increase profits for the exchanges. It may help create liquidity as well, but in general, it's not healthy when your customers get knocked out of their positions, particularly when you have an immature infrastructure. That a lot of people, if you go on Twitter, are complaining that they were automatically deleveraged while they had a winning position, and that's not good for your customers, right? So I think in general we need to be a little bit more careful with leverage. With bitFlyer in Japan, for example, the government has reduced it by law to 2x. You can't do more than 2x leverage in Japan. And you're not going to see 100x and 125x leverage kind of in normal healthy markets, I think.
I think leverage is, obviously you have to be prudent with it. And all things considered, I think the Bitcoin space is actually, given that a lot of these platforms are unregulated, has managed leverage decently well. But it's, in a way, I think it's going to be natural, particularly for Bitcoin, because you have an underlying that is fixed in issuance, obviously, which is why we're all here. And then on top of that, you have, Satoshi's coins, you have hodlers, you have coins being held in cold storage. So your float is fairly low. And so in order for people to get exposure, I think it's natural that it would come from levered products. It would come from, things like futures and derivatives that we're seeing. So I think particularly given the nature of Bitcoin as an underlying, it makes sense. And obviously I agree that it has to be done in a responsible manner.
And I would say that, my interest is to see that not just spot transactions growing, but also, peer-to-peer, meaning peer-to-peer transactions of people just moving Bitcoin from one to another. The more people get accustomed to it, and the more they feel comfortable getting it from a friend, getting it from a family member, getting it from a business as either a form of payment or a form of quote unquote digital gold, the better the industry as a whole will be. So leverage is a very sophisticated, high risk endeavor that I think should be reserved for people who are very skilled at that. Sure, I mean, people can do it if they feel confident and if they feel comfortable with the risk that they're taking. But largely speaking, I think growing the spot transaction on Bitcoin and growing the peer-to-peer transactions in Bitcoin between individuals is what we should care about as an industry, because at the end of the day, this is, I think, what we're trying to create here is we're trying to create a new way of a new monetary system in a way that will expand and get to everyone wherever they are in the world.
I think I want to touch on what Joel said. Really, the infrastructure is not there yet across much of the industry, and what we need to make sure as providers that when a customer says they want to purchase Bitcoin, whether it's on leverage or not, that we can deliver that purchase for them. What you find with a lot of the different infrastructures is they don't yet have mature margining systems, and there's not yet a guaranteed clearing of these transactions. So, like in the US, when you trade options, you have guaranteed clearing of your options trades or your futures trades. It just doesn't exist yet in crypto. So there's possibilities that customers think they buy assets that they're just not able to be delivered because some of the infrastructure is just not there and the margining systems will not be able to properly get the assets the customers purchased.
Great answers, guys. For those of you that are affiliated with exchanges or brokerages, what are some tools that you're giving your users to express their opinions on events like the Halving? What's something that you're excited to see your users taking advantage of?
I'm happy to take that. First, eToro is a social trading platform. So inherently, we have a social feed where people can post their ideas, their thoughts about the Halving or about why people should sell Bitcoin and why they should buy ETH or whatnot. So it's inherent, it's native to our operations. And we're happy to see people posting their ideas, their thoughts from around the world. We're live in 140 countries. So it's just fantastic to see how they react to one another and how they post about it. So this is, effectively, this is what makes us unique. I let the other kind of talk about themselves, but obviously we have much more than that in terms of trading tools that are built on our social kind of social trading capabilities. But by and large, eToro is where you can actually have a social feed that is tied to investment, tied to trading, and tied to kind of grow your wealth.
Yeah, for bitFlyer, we have obviously very strong technical tools. Our founder was from Goldman Sachs, so we have a lot of more sophisticated trading tools. Obviously, we have the APIs, but you see a lot of the large institutional customers. They have their own way of doing things. They have their own tools, but I think there's still a lot to be done as far as Bitcoin analytics and data to get that information advantage. It's still very early days, I think, for these type of tools. And that's a very fertile ground, and there's a lot of companies getting into that space. But I think that is an area that we need to do better. There's too much of an emphasis on technical trading. I think we can do more on fundamental investment as it gets accepted as payment rails and it gets more into the real economy. Maybe there's things that we can do around that area. I think there's also a lot we can do with analytics and AI that are not in there yet.
We see on our side, we have the spot market, but underneath the TradeStation brand, we also offer a variety of other asset classes. So we see this being shown in the spot trades, but also some more creative cash carry arbitrage between the futures products offered by the securities broker dealer and the spot by TradeStation Crypto. We do see a lot of kind of interesting movement between the different asset classes offered underneath the firm umbrella.
Great answers, Joel. I mean, I hope you're not pandering to me. I'm a huge advocate of trying to discover fundamental analysis, building out analytics techniques for really understanding, Bitcoin and crypto assets, at a deep level. So maybe on that topic, what do you consider the fundamentals of Bitcoin to be? If you could, select one or two metrics or themes you think might actually constitute a fundamental for Bitcoin. I don't know if there's anything you guys could think of which you find particularly important.
I mean, for me, I'm not that smart. I think there is a lot to be done as far as, particularly on the payment side, as far as how we integrate into real economy, but it's still early days as far as that integration. So what are the fundamental drivers, particularly on the demand side, beyond just institutional investors and trading and everything like that? When the payment rails go in place and you start seeing things priced in sats, that's where I think fundamentals would really have a much more fertile ground to grow in. I think though there are ways that we can look at fundamental investing that have not really been explored in a lot of detail. There's not enough studies done on it yet, but I've seen some interesting ideas out there where people are starting to dig into it. But you know, if I knew that right now, I would have another company on the side.
So I think just to chime in here, I think that it's true, Bitcoin doesn't have any fundamentals. So we thought long and hard about this, and we then partnered with a company called TAI. And what they're doing is basically looking at sentiment analysis. They're trying to figure out if sentiment is somehow tied to, or it's a price indicator, right? Maybe that's a start of a fundamental. And so they're scrubbing the Twitter fire hose, removing all the bots and all kind of the accounts that are suspicious, kind of making the data clean and trying to understand what is the sentiment around Bitcoin, and then based on that, doing a regression analysis and see if that's some indicator of price movement. Hedge funds have been doing that for a while with equities, and that has been proven successful for some of them. And so some crypto funds have been using this tool too, and we've been trying to make that available to our customers on eToro.com. And it's still, I would say, something that we are investing in and researching on, or researching. And but it is true, there are no fundamentals, but maybe sentiment is the closest we can get.
That's what's kind of exciting about this market, though, is there's a discovery of all these different ways to look at the data, and people are coming up with new different ways to slice this every day, and it's really interesting to see what our customers do, and also just other participants in the market. So it's green fields right now. So let's find the good ones.
Yeah, I like to say we haven't had our Graham and Dodd moment just yet. Hopefully one sometime soon. And the slight irony in that we're about to celebrate, actually, in 6 blocks time, a change to supply or the delta in supply, which I tend to be much more focused on the demand side factors, as you guys are pointing out. So on a different topic, so we've seen a lot of talk in 2017 around, part of that 2017 rally was predicated on the institutions coming, with the idea that, things like the CME futures products would unlock the potential for institutions to express a view on this asset class. To some degree, we've seen that happen, with the Paul Tudor Jones news. And, I could probably name a half dozen entities I would consider institutions that are active in the market. But there's a lot of kind of semantic confusion on this. So I would pose the question to you: what does an institution mean to you? What does that term mean? And how important is that really?
I mean, for me, when I look, sorry, go ahead, Juthica.
Okay. I mean,
No,
so I would say, like, when people initially, I think, talk about institutions and currently talk about them, they're referring to, or have historically referred to, the traditional financial institutions. And I think the reason for that is less about the dynamic behind who's actually investing in Bitcoin and more about the amount of capital that they could actually put to play in this market, especially relative to its market cap. And so I come at it from more of the latter side, which is that institutions can really be anyone that is, had just built enough of a capital base, enough of a corporate and company behind it. So it doesn't necessarily have to be the traditional folks. And I think in that vein, we shouldn't necessarily cater to the traditional folks, but there's no question that Paul Tudor Jones and Rentec and these guys coming in is probably what people had in mind in 2017, and probably a lot of who they were building for, and maybe are currently still building for.
Yeah, I mean, I agree with Juthica on this, though. I look at the institutionals as kind of two different groups. There's a group that's, comfortable with risk, and those guys are already into Bitcoin and derivatives and everything like that. And they're really just being held back by, what are their strategy? How do they take advantage of the asset class? And also liquidity. But there's another side of the institution side, which is the pension funds, the insurance companies, asset managers, where there's huge amounts of money. Those guys are going to move much, much slower. They first have to go through the risk management committee. They have to look at operational risk. They have to look at counterparty risk. There's a lot of different things for them to move that money over. And when they do move it, it'll be an experiment. They'll look at it for a couple of years, see how it reacts in different times and different economic situations. So I think, yes, the early adopters are already in as far as institutional money, but the massive amount of institutional money is going to move much, much slower. But I think the real question for us is, why are we waiting for institutional money? Why don't we grow ourselves and buy the institutions? Just like with the early days of internet, you had AOL buying Time Warner. Where is that AOL Time Warner moment for Bitcoin, where we are beginning to change the traditional infrastructure to the new infrastructure? That, I think, is the more interesting question for us on the institutional side.
Yeah, so just to maybe add to that, I think we all agree that crypto and BTC in particular is an uncorrelated asset class, and so a lot of financial disciplines are calling to basically diversify your portfolio by adding it in order to maximize your returns in a way. So the question is just how much exposure you want to it, and so on and so forth. But I think what we're being taught about diversification and whatnot is being answered by adding, Bitcoin to your portfolio. We're also been seeing, I think, a few endowments moving into university endowments, which are particularly slow to adapt. Maybe part of the group that was mentioned before, but they are trying that. It is indeed in a pilot phase, but they are experimenting with Bitcoin, so that's good. I would say, to Joel's point, that the way I think to get there is indeed not to wait on institutions, but actually try to go the route of the financial advisors and financial planners. And when the average Joe or family is planning on investing, savings, thinking about their future, the way to do that is maybe get more education into financial advisors, financial planners, and then get more households to put 1% in their net worth in Bitcoin. And I think if the demand will grow that way, and if we enable financial advisors to get comfortable around that, give them the assurance that they are the equivalent of qualified custodians out there, and there are good players out there, and they can be comfortable that it won't be some sort of a get rich scheme type of thing, then we have a real chance of seeing much greater adoption. And from that, the institutions might find be more interested in looking at this asset class.
Well, I think given that we have about 5 blocks to go before the halving, I've got my champagne ready here. I've been instructed to wrap this up, so I thank you all for your participation. Really fantastic conversation, and we'll let BTC Magazine take it away from here. So thank you all.
Thank you
very much.